Okay, good day, traders. Welcome once again to today's episode of my weekly Forex Forcast. This is Ononako Toshku speaking for Lazarus Capital. How you guys doing? Hope you are doing great. Hope you had a wonderful a wonderful week. We're in the new month. The month is just like I think this is just like 10 days gone to the new month. The month is still fresh. I trust you guys are having a blast. So without wasting our time, let's just go right into the business of today. As you all know, I do this every weekend to analyze the market and show you guys what I'll be looking at in the coming days as per the peers I'm trading. So, and as like I always tell us, my trading strategy is very simple. Once I have analyzed the direction of the market, I want price to come to my area of value. From there, I wait for my market participants to come in and I join them. Simply put that, the analysis of the market for me is being done in three phases. One is identifying the direction. The second is identifying the location. Then the third one is the execution. So the weekends is where I analyze the direction of the market and identify a location where I want to participate from. Then during the weekdays, what I'll be waiting for is for price to come to this area. Then if my market participants come in, I will join them. So my area of value for me is a support or a resistance area where price have tested in the past. I also have a strategy which is the ranging strategy. When the market is ranging, I want to buy from a demand or a support area and sell from a resistance or a supply area. Even in this ranging market, I still wait for a pullback. The pullback is very, very important, for me. The pullback is very, very important for me. But once the market is ranging, I can participate in both ways. When the market is ranging, one of the difference in the ranging market for me is that in a week I can participate from the sell side. I can also participate from the long side. But if the market is trending, I only have one bias for the week. It means me coming into the week, it's either I want to sell or I want to buy. But if the market is ranging, I might sell or I may buy, depending on which area the market comes to and give me my setup. So without wasting our time, we'll go right into the charts. We'll be starting with the BTC USD. We've done this analysis last week and we'll be waiting for our entry, but the entry have not come. But let's just do a quick recap. Today's analysis will be very, very brief because we've done all this last week. So the first thing for me is to identify the direction of the market. We can see that for now, the BTC USD is trending to the downside. You can see there is a lower high, lower low, lower high, lower low, lower high, a lower low. As long as the market have not created a higher high, the character of the market have not changed to the upside, we are still on a downtrend. So lower high, lower low, lower high, lower low, lower high, lower low. This is the characteristics of a downtrend. And I also tell us that one other thing I use in identifying my direction is the 200 EMA. This is the 200 EMA, although we're on the daily time frame now. This is the 200 EMA. Price is trading below the 200 EMA. When the price is trading above the 200 EMA, the market is bullish. Now it's trading below the 200 EMA, the market is bearish. So for this, I can see that the BTC USD is in a downtrend. I can now identify that the direction of the BTC USD is to the downside. So the next thing I'll be looking at is where do I sell from? So identify the direction. The market is bearish. The next thing is now identifying a good location where I will sell from. Let's zoom out. So now I can see the market is bearish. Now I'll be looking at an area of value where I want to sell from. If I take this area from here, let me go to the line chart. One way that I identify my area of value is to look for a level. If the market is bearish, I want to look for an area that the market have used as a support in the past, which will be coming back to act as a resistance. And I'm looking at this area, I'm seeing that there's support here, support here. There's a support here, which I expect to come back to turn to resistance. Let me still take this down a little. Okay, cool. Acted as a resistance here, support here, support. So I'll be expecting the market to come back to this level and use this level as a resistance to take the price down. So let's go back to the candle. So you can see this area is a good area of value. Acted as a support here, support, 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 resistance. I expect it to come back and act as a resistance to take this price down. So but the next thing I want to do again is I want to see if this area line up with my Fibonacci. If the market is expanding, I might take the 38.2, but if it's not expanding, I might use the 5061.8 Fibonacci area. If I take my Fibonacci from this swing high to this swing low, I can see that this area here is my 38.2. This resistance here is my 38.2. If I take my Fibonacci from this area, I can see there's a support here, there's a resistance here. This is a good area when this market drop from. If I take this area, I can see that I have a 61.8 at this point. I have a 61.8 at this point. You can see this area. Resistance, resistance, support, resistance, support, resistance. 5061.8 at this point. Good area of value. There's a support here, support here, support here, resistance. I expect the market to act as a resistance at this point. 5061.8. If I go back up, I have a 38.2 at this point. 38.2 at this point. So this is a good area for me, which I'll be expecting the market to come from. Let me go back to the 4-hour time frame. So in the 4-hour time frame, I can see that the market is at this location. This area of value is a good area of value. This area of value is a good area of value. This is a good area of value for me. So once I've identified the direction of the market, the next thing is for me to wait for the market to come to a good location. From there, I want the sellers to come in and join there. For the BTC USD, I can now identify that the market is still bearish. So going into the week, my bias for the BTC USD, I'm still bearish. What I'll be waiting for is for the sellers to come in. I will join them. So for now, I'm waiting for the BTC USD to rise into this area. It's easy to rise into this area. Anywhere in this zone, the sellers come in, I will join them from this point and take the price down. I will not be bullish on the BTC USD until price close above this resistance area. If the BTC USD closes above this resistance area, then my bias will change from the downside to the upside. Then I will just be waiting for price to pull back to this resistance area that will turn to support. Then if the sellers come back and they can't close back below, they get here and they stop and the buyers come in. This is the only situation whereby I will be buying the BTC USD. This is the only situation whereby I will buy the BTC USD. Anything aside this, in the coming days, I'll be waiting for the price to come to this resistance area, support, 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 resistance. Wait for price to come back to this area. If the buyers get to this location, they can't close above. They get here and they stop. They become weak, and the sellers come in. From here, I will join the sellers and I will take the price back down. My TP1 will come down to this 100% retracement at so entry will be around this point at 65,724. Stop loss can be just above this resistance area at 68,248. TP1 will come back here at 58,749. Then TP2, we'll go back to my higher time frame target. TP2 will be at this point. 52,800. TP2 will be at 52,800. While TP1 will be at 58,780. So let's go over to the next pair, which is the Euro USD. So for the Euro USD, now I told us that the Euro USD, for me, the market has been trading in this range. Price got to this. Market have been trading in this range. Market have been in this range. Got to this demand area, went up, came back down, came back to this level, used it as a supply, came back to this demand area, went up. So I told those guys that one of my rule for the ranging market is that when the market is ranging, I've noticed that the price goes from a demand area to a supply area, from a supply area to a demand area, meaning that once the price have left a demand area, it's going to a supply area. Once it has left the supply area, it's coming to a demand area. Now, since this price left this demand area, it has not gotten to this supply area. Because price have not gotten to this supply area, that is why I said I won't be selling the Euro USD unless I see price dropping off from this supply area or closing below this demand area. I can only sell. I told those guys that when the market is ranging, I sell from supply or resistance and I buy from a demand area or support area. So the only time I will be selling the Euro USD is if price close below this demand area, then pull back and use that demand as a resistance. And if the buyers fails to close above, they get here, they become weak, the sellers come in. This is the only place that will be selling the Euro USD. Or price gets to this supply area, fails to close above, gets here and they stop, and the sellers come in at this point. From here I will sell, or close below, pull back, from here I will sell. Anything aside that, what I'll be looking for in the Euro USD is a bullish scenario, because I've seen that the price have left this demand area. So for me, as it has left this demand area, it's coming back to this supply area. So what I'll be looking for, I've seen that the price have push up from a demand area. I'm waiting for a pullback to a support area. From there I will buy the Euro USD. Let's go to the 4-hour time frame. So on the 4-hour time frame, I can see that price have created another demand area, which a potential demand area for now, because the price is still moving. We don't know whether these sellers will close back below here, or if the buyers will hold to continue this price upward. So in the coming days now, what I'll be waiting for the Euro USD, I want to see price pull back. And I'm looking at a good support area at this point. I'm looking at this area. I want the price to come back to this area. All these people who have been buying the Euro USD, I want price to come and take them out and come back to this support area. From here, this is the area where I'll be buying the Euro USD forecast. Consider it's a good support area. Price from here, buyers came in. I'm expecting the buyers to come back from this point. And if I take my Fibonacci from this location, let's move this a little here. If I take my Fibonacci from this location, from this swing low to swing high, I can see that this area is my 61.8. So I can see this is a good, this is a good support area, lined up with my Fibonacci 61.8. So in the coming days, what I'll be waiting for the Euro USD, so price to come back down. I want the Euro USD to come back down into this area. It might even come back more below this place. Remember, I will not be bearish on the Euro USD until I see a close below this demand area. If price did not close below this demand area, you come to this support, gets weak, or at this demand gets weak, and the buyer coming, this is where I'll be joining the buyers to take the price to the upside. The buyers coming from this support area, I'll join them, or if they coming from this area, I'll join them. Do you understand? So, but if this bearish move continues and the sellers close back below this demand area, I will change my bias from being bullish to being bearish. Then I will just wait for a pullback into this demand. I will turn to a resistance area. From there, I'll wait for the sellers to come back. I'll join them. This is the only place I'll be selling. This is the only situation whereby I'll be selling the Euro USD. So for now, on the Euro USD, we are still bullish. So the Euro USD, we've been able to identify that the market is still trading in this range. The Euro USD is still trading in this range. This is our support area. The Euro USD is still trending in this range. The Euro USD is still trending in this range. We saw price trying to close below this demand area, but buyers came back and pushed the price upward. So it's we can see clearly now that these buyers are still available. These buyers that did demand area are still available. So what we'll be waiting for in the coming days is to see a pullback. If we get a pullback at this point, this is where we'll join the buyers. We'll join the buyers at this point. If the sellers, this sell move now that is going on now, if the sellers come back, we'll be watching them. If they get here, they become weak, or here they become weak, and the buyers come in, this is where we'll join the buyers and we'll take the price, to the upside. Entry can be anywhere around this point, between 1.13794 to even to this demand area, anywhere in this from this point now. Let me take the Fibonacci again. Okay, 61.8 starting from this zone. Let me just take all this down here. So anywhere from this point now to this point, if the sellers come and they can't close below, they become weak, the buyers come and we'll be joining the buyers from here, take the price up. So entry can be between from 1.13781 to 1.13239. If the price gets to this area and gets weak, and the buyers come in, will join. The stop loss can be slightly below this demand area at 1.13195. Tipo 1 can come back to this resistance area. This support that will turn to resistance at 1.15016. Then TP2 will come back to this supply area. TP2 will come back to this supply area at 1.20810. Let's go back to the next pair, which is the gold. The gold has a similar pattern, just like the Euro USD. The gold has a similar pattern, just like the Euro USD. You can see that, we have a supply here, we have a demand here, supply, demand. Although the price why it has been making this movement, has been moving to the downside. The gold has been moving, to the downside. But I can see that there is a support area at this point, which is where the price is bouncing off from. And this is a good support area. This is the daily time frame. From here, this price launched all the way to the upside. So we'll see price got to this point. The buyers came in and the sellers came back. They cannot, close below this demand area. They got to this demand area. The buyers initially came in when the price got here. There's another support area at this point. Price got here, the buyers came in, the sellers pushed back down. They are supposed to have made a significant move down, but they got here at this demand area and they stopped. The buyers, came back in. So what I'm thinking now is that these buyers who started this move here, look at them here, look at them here. They are very much available, at this point. So in the coming days, my bias for the gold will be to the upside. I'll be looking to buy the gold. In this coming week, I'll be looking to buy the gold because I've seen that even though the market is bearish, the sellers are having challenges. Continue this their bearish move. We have a strong demand area here. Like I told us guys, if the market is trending, I want to see supply. I don't want to see demand. It means if I'm seeing supply, I'm not seeing demand. It means the market is trending to the downside. If the market is trending to the upside, I want to see demand. I don't want to see supply. It means the market is moving to the upside. But if I see a market whereby I'm seeing a strong demand, I'm seeing a strong supply. I'm seeing a strong demand, I'm seeing a strong supply. Anytime the market comes to this supply area or the demand area, I want to be careful. Just like what we are seeing with the Euro US and the BTC USD. There's a strong demand area. From here, this market launched to the upside. There's a supply area here. The market came down. Another demand went up. Another supply came down, went up. Now, the market is approaching this demand area, and you can see that the sellers are struggling. Now, I want to be careful. So, using, my rule for the ranging market, that when the market is ranging, I'm seeing sellers, I'm seeing buyers, I'm seeing sellers, I'm seeing buyers. It means, there's an equilibrium in the market. The market is in the balanced state. When the market is in the balanced state, I want to be careful with the sellers. I want to be careful with the buyers. Where the market is in the balanced state, when it's ranging, it's in the balanced state, it's moving, in a particular range. I want to be careful when the market comes to the resistance. I want to be careful when it comes to the supply, to the support. When the market gets to the support area or a demand area, and the sellers are showing sign of weakness, I don't want to still be bearish. Even though I will not just jump into the trade, I don't want to still be bearish. I want to start, looking, for a setup from the for the buy side. When the market gets to a resistance area or a supply area, and the buyers get to that area and they become weak, I don't want to be bullish again. I want to start looking at things, for a sell setup. So that's what is happening to the gold now. So I can see that from this point, we can see a movement to the upside. There's a demand area here, even though there's a strong supply, there's a strong supply area. So the market gets here, and I'm seeing the weakness from the sellers. They came here, buyers pushed back up. They came back, the buyer pushed them back. They are coming down. See how weak they are coming. I'm not seeing a strength. I'm not seeing strength for them. I'm seeing weakness in their side. Nevertheless, this is not a guarantee that the market will buy from here. So we need more information. So in the coming days, let's go to the forward time frame. In the coming days, now what I'll be looking for the gold is in the coming days. Now what I'll be looking for the gold is put this here. Now, for me to be bearish on the gold, I want to see the sellers close below this demand area. If the sellers fail to close below this demand area, they come to this area, they get weak, or here they get weak, and the buyers come in strongly. I'll be joining the buyers from this point to take the price to the upside. But if the sellers are able to close back below this demand area, then I will not be bearish. So in the coming days of the gold, I'm looking to buy the gold. If the sellers come to this area and they become weak, and the buyers come in, I'll join the buyers from here and take the price up. So in checking at my area of value now, I'm seeing that there's a good area at this point. There's a good support area here. So price acted as a support here. So I'm expecting the price to come down, the price will come back down and still use this area as a support from there to go up. If I take my Fibonacci from this swing low to this swing high, I can see that this area here is a good 61.8 Fibonacci for me. I'm going to remove this. Let me zoom this back down here a little, and let me bring this up. Okay, cool. So you can see that this swing low, swing high is 61.8 at this point. 61.8 at this point. So in the coming days now, I'll be waiting for the market to pull back to this support area or this support area. From there, when the buyers come in, I'll join the buyers around this area to take the price up. Or if they come in from this demand area, I will join them here and take the price to the upside. As long as the sellers fail to close below this demand area, I'm bullish on the gold. So I'll be waiting to see a weakness from them from this area. You can see even the head and shoulder, the inverse head and shoulder traders. I will tell you this is the right shoulder, this is the head, and this is the left shoulder. From here, the buyers will come in and take the price up. But me, I'm not looking at the head and shoulder. I'm just looking at, because see guys, like me, I consider when the market is consolidating, when the market is ranging, it can start forming different things. It can form head and shoulder, it can form whatever. When the market is consolidating, I'm not seeing head and shoulder. When the market is consolidating, I'm not seeing head and shoulder, I'm not seeing double top, I'm not seeing double bottom. I'm not seeing head and shoulder, inverse head and shoulder. No, what I'm looking at, if the market is consolidating, to me, this is a build up. And when the market is building up, the market can either be building up for a reversal or be building up for a continuation. Now, when the market is bearish, in the case of the gold now, from this point, the market has been bearish. Even though overall the gold is bullish, the current trend of the gold is to the downside. Now, when the market is bearish to the downside and it begins to build up, that build up to me can mean two things. One, it can be that the market makers are liquidating their position so that the market can reverse, or they are building their position so that the market can continue. So when the market is building up, I'm not seeing inverse head and shoulder. I'm not seeing head and shoulder. I'm not seeing double top. I'm not seeing double bottom. What I'm seeing is a build up. Now I'm looking at that build up. I'm looking at this build up now. This consolidation now, let me not call it a build up. This consolidation now, is the market makers liquidating their position so that the market can continue upward? Or are they building positions so that they can continue downward? This is the two questions I want to solve. When I'm looking at when the market is in a range now, when the market is in a range, there are two questions I'm asking myself. Are the market makers building their position to continue this downtrend, or are they liquidating their position for the market to reverse to the upside? So with this question, I become neutral in what is happening in the market. So I begin to look at the market, from a polar perspective, from a two-side perspective. So now, what I want to see is weakness from the sellers. I have seen that, especially if we have approached a demand area. If we are not in a key demand area, support area, the market, there's high chances for the market to continue in its direction. But when we've gotten to a key area, like a demand area like we have for the gold now and the Euro USD, I want to be careful and I want to be watching to see if there's weakness from the side of the sellers and the buyers coming. I will join the buyers. But if the sellers are able to close below that demand area, then I'll wait for a pullback. If the pullback comes in and the market cannot break back above that demand area and the market gets here and it stops, this is at the point where I will sell the gold. From this point, I will sell the gold. If this did not happen, then the sellers come back, fail to close below, they get anywhere around this place and they become weak, they stop, and the buyers come back, I'll join the buyers and take the price up. So for the gold, in the coming days, I'm bullish on the gold in the coming days. I'm waiting for the market to pull back either to this level or anywhere in this place. The buyers come in and they are weak. The sellers come in and they are weak. The buyers come back. I'll join the buyers, take the price to the upside. TP1 will come back at this resistance area. Stop loss, if I'm buying from here, stop loss can be below this support area. If I'm buying from here, stop loss will be below this demand area. TP1 will come back at this resistance. Then TP2 will come back at this higher time frame target, which is this supply area. And that is why, guys, and that is why sometimes when I'm doing this analysis, it is hard for me to give you an exact entry. When I'm doing this analysis, it's hard for me to give you an exact entry because in the coming days, I might be looking at the sellers will get here and become weak. Instead, they will come to this place. So that's why I'm not giving an exact here. I'll just tell you between this place and this place. So what you'll be looking for is weakness from the part of the sellers, then strength from the part of the buyers. Then you join the buy and take the price off. Stop loss, if you enter with the 4-hour candle, that 4-hour candle that closed, the bullish 4-hour candle that closed, maybe an engulfing or whatever momentum candle that closed, your stop loss can be some pips below it. You enter above, then you target the next resistance area. So that is this for the gold. Let's move over to the next pair, which is the Nasdaq. So for the Nasdaq, I told us last week that the Nasdaq, let's go to the daily time frame. The Nasdaq had been in a range. Nasdaq has been in a range. The Nasdaq is the one that is in a clear range. I told us that, when the market is in a range like this, I want to sell from a supply or a buy from a demand. This is a supply area, this is a demand area. The market was trending. It got to this area, it began to range. The market have been in this trend. It got to this area, it began to range. Now, at this point when the market is now, the market is in a range. This range now, we don't know if the market makers are building up their position to continue this bullish move, or if they are building up their position, or if they are liquidating their position for the market to reverse. We don't know. I'm not an insider. What we do is to read the price action. This I cannot tell you. So I will not come here now and start looking at head and shoulder, because you will see head and shoulder, you will see inverse head and shoulder. So which one are we going to follow? In this build up now, there's head, right shoulder, head, left shoulder. There's right shoulder, head, there's left shoulder, head, right shoulder. So which one are we going to follow? So that is why when the market is in a range, you can see after this, after this move to the upside, the market begins to move in this range. Now, we don't know if the market makers are building their position to continue upward, or if they are liquidating their position to continue downward. So that is why, they will tell you when the market is ranging, stay out of the market. Wait for it to break out. If it breaks out to the upside, you wait for a pullback. And you continue to ride the market to the upside. Continue to ride it to the upside. If it breaks out to the downside, you wait for a pullback. Then you join. So, but because of the nature of the market, because we now have a lot of players in the market, a lot of retail traders, a lot of banks, a lot of hedge fund, institutional traders, the algo traders, and the rest. So many traders. Now, because of the nature of the market now, you must learn how to figure out what is happening when the market is changing. Because you see this move that happened now. See how long it took this move to happen. This is 31st of March to 6th of June. This is just like let's say less than 3 months. Less than 3 months this move happened. This move happened less than 3 months. Now see how long the market have been in this range. This is June and we are in July. The market have been in a single spot. But see, in less than in 2 months plus, look at the movement it made. But going to 2 months now, the market is still consolidating. So you must know how to answer this question that is happening here. You must know how to answer this question, because before this kind of move will happen, you must see things like this. So when they tell you stay out of the ranging markets, yes, they are saying it for your own good, for you to preserve your account, to avoid you take a winning trade today and your next 5, 6, 7 trades will be a losing trade. Because when the market is ranging, it's difficult to trade, it's difficult to analyze, because it's just going up and down. You can see people who are trying to sell, the market start to buy. They were selling, the market start to buy. They are buying, the market is selling. So it's just chaos. So, but the truth of the matter is, until you can answer this question that is going on here, you will not know when this move will happen. Until you can answer this question, until you can know the why behind this consolidation, behind this range, you will not know. You will not be able. You will just be suffering in this range. At the end of the day, one day you come, you see the market has start trending. This thing that is happening now, the market is building up to either move to the upside or to other move to the downside. Now, for me, how do I, deal with a market like this? The first thing for me is that I want to remove all this. The first thing for me is that I don't know whether the market is going to break out to the upside. I don't know if it's going to break out to the downside. But what I will be doing is that the only area where I'll be participating in this market is if the market comes to a supply area, gives me an entry to sell, or a demand area gives me an entry to buy. At this place, at the mid of this range, I will do nothing. Let's go to the forward time frame. So for the Nasdaq, this can look like a lot. What I'll be waiting for the Nasdaq is price. What I'll be waiting for the Nasdaq is for price to come to this resistance supply area, and if they fail to close above, they get here and they stop. The sellers coming from here, I will sell. Or price come to this support area or demand area, the sellers fail to close below, and the buyers coming from here, I will buy. Sell from supply or resistance, buy from demand or supply. Then if the price gets to the supply area and close above, I'll wait for a pullback. I'll buy. I will continue to buy. If it close above, if it gets here and close above, if the price gets to this supply area and the buyers continue their march and they break above this supply area, then I'll wait for the price to pull back to this supply that will turn to support area. From there I will buy. If the sellers continue to come down and they close below the demand area, then they get here, they were not weak, they control their march to close below this demand area. Then I'll wait for a pullback to this resistance area, then I will join the sellers to continue down. So in the coming days for the Nasdaq, I don't have a bias for the Nasdaq. I don't have a bias for the Nasdaq because the market is ranging. I don't have a bias for the Nasdaq. what I'll be waiting for the Nasdaq is come to support area, the sellers become weak, the buyers come in, I'll join them. Come to demand area, the buyers, sorry, let me take it again. Come to a support area or a demand area, the sellers get weak and the buyers come in, I'll join them. Come to a supply or a resistance area and the buyers get weak and the sellers come in, I will join the sellers. So that is, my bias for the Nasdaq. I will be selling from this supply or resistance area, or buying from this demand or a support area. So let's move over to the next pair, which is the Usoil. So the Usoil, is a clear one. The market have been in this range, but suddenly we'll see a break to the downside. The market have been trading in this range. Market have been trading in this range, going up and down, up and down, up and down, up and down. Suddenly we'll see a break, a close below this demand area. So that's what I was telling you guys. So I cannot see a close below this demand area. The sellers got to this demand area and they closed below the demand area. So now they've given us a direction for the Usoil. I cannot confirm that the market is trending to the downside, even though currently we can see the buyers stepping in at this point. So for me to sell the Usoil, what I'll be waiting for, I want to see a pullback into this demand area, so into this resistance area. Price coming to this resistance area. From there, I'll wait for the sellers to come in and I will join them. So I'll be selling the Usoil from this area. I think, let me take this. I want to close in on this gap here. You can see this gap here. I'm waiting for the market to rise into this area. Anywhere from this gap, to this area at $85, $86. So if I take my Fibonacci from this area, I think there's an area here. Okay, cool. From here to here, I can see that this area is, let me see this area. Okay, cool. I can see this area. Okay, let me take this area. So I'll be waiting for the Usoil to rise into this area. Wait for a rise into this area. Then when the sellers come in, I'll join the sellers at this point to take the price down. So for the Usoil, the market is to the downside. So I'll wait for a pullback to this resistance area. From there, if the sellers come in, I'll join them. So entry can be at this point at between $82 to $86. Stop loss can be slightly above here at $87 per barrel. TP1 come back at this 100% retracement at 68 dollar per barrel. Then TP2 can come down here at $57 per barrel. So guys, that's my analysis for today. Thank you so much. Until I see you next week, please take care and protect your capital and remain blessed. Thank you.